Hi, everybody. I'm Bob Marone for Westchester Talk Radio. And once again, we are with our friends at Hightower Westchester. This topic this morning, the state of the commercial real estate market here in Westchester County. And we are fortunate to have two guests today, Roman Ciosek, Managing Director and Partner at Hightower Westchester, and Andrew Weisz, President of the RPW Group. Again, Roman is a Managing Director Partner at Hightower Westchester. He focuses on building our customized financial planning strategies for high net worth individuals, foundations, and business owners. Andrew is president of RPW Group and is responsible for directing the firm's real estate investment and leasing activities. In this role, Andrew is actively involved in sourcing new opportunities and leading the execution of business plans. We thought it would be interesting to get some insight around the local commercial real estate market from one of the largest commercial real estate owners in Westchester. Roman will also give his insight on how Hightower Westchester incorporates real estate into their clients' portfolios. We'll start with you, Andrew. Could you tell us a bit about RPW Group and your role in the business? And before you do that, welcome to the broadcast and videocast, sir.
Thanks, Bob. And I just want to say that I've known Roman and his wonderful family for the better part of 15 years. And it's been really nice to meld the personal friendship alongside a business relationship. So I'm very pleased to be on. A little background on the RPW Group. We are a family-owned operator and owner of commercial assets through Westchester County, Fairfield County, and Manhattan. We own approximately 4 million square feet of commercial space. And in addition, in the last 5 years or so, we've diversified into multifamily ground-up residential developments. So alongside a partner, we just delivered 303 brand new rental apartments in White Plains, New York. And we are about to embark on the development of 200 units in Harrison, New York. So our bread and butter has always been commercial office, and more recently, in addition to that, we've commenced a multifamily ground up development arm as well.
Roman, can you tell us how your guys look at real estate and the various opportunities that you see in the space?
Absolutely. Thanks, Bob. And great to have you here again. And Andrew, thanks for jumping on our calls here, and certainly value the relationship that we've built over the 15 years on a personal and also on a business level. So thank you again. And the one thing you and I do every year, which I really value, is we sit down and really get an understanding from your lens and your perspective as to what's happening in the commercial and now more so into the residential world as well. So I truly appreciate that part of it. But it allows us to get a deep perspective from not only the local markets, but provides us broader themes that we ultimately do incorporate into our overall clients' portfolio and allocation. I think for us being in business for 25 plus years, our team has always placed an emphasis around real estate and the importance of integrating it into overall portfolios. And the beauty of real estate, not only is it a diversifier, but at times like this, when you see inflationary pressure increase significantly, it is a great hedge to the overall portfolio. In other words, it is a hard asset, and it protects the majority of the times during good times and bad times around inflationary pressure. But the nice thing is there is this ability to have this form of consistent increase in income, which we do value for certain clients.
Andrew, clearly there's been a significant amount of volatility in your space. As you own and manage property, you've seen firsthand from pre-pandemic to uncertainty during the pandemic. Can you provide a little context about how you see things now in your space?
Sure. So no big surprise that the commercial office sector has certainly faced some significant headwinds since the pandemic hit us. And look, that on top of inflationary pressures, interest rates increasing, an incredibly tight labor market, and of course, sort of a very fundamental change in the way companies are working and how individuals are using the office space has made the past 2 to 3 years quite tricky. With that being said, what is clear is that there's still a need for an office. How that office is used certainly changes from one company to another. But what we have seen is the buildings that are well amenitized and well located and have strong ownerships have performed moderately well and have held their own. We anticipate that to continue. They're sort of calling it the haves versus the have-not trend, and you're seeing that across the country, where the well amenitized buildings, the solid A and B buildings, if you will, are leasing and are performing. Meanwhile, sort of the have-nots are struggling. So the question really is, what happens to the have-nots, and that's sort of playing out in real time.
Andrew, are you looking for other areas to expand, such as New York City? And how do you compare that market to the local situation here in Westchester?
Sure. So we're very highly focused on the tri-state area. We specialize in sort of the New Jersey, New York, and Connecticut region, and we don't anticipate deviating from that. With that being said, as I mentioned in the intro, over the past couple of years, we have diversified into more of the multifamily development side, which we anticipate we will continue to grow that business. But nonetheless, we're very much focused on the tri-state, and due to a lot of the headwinds and the pressures that I mentioned before, particularly interest rates and inflationary pressures and rising construction costs, the investment sales market, so the market, the sales market of office buildings really came to a halt throughout the majority of the pandemic. We're just starting to see that pick up again. But there's been very, very few trades throughout the region. And we'll have to see sort of how things play out in the coming, year to 24 months, just as, you start to hear some distress starting to hit the market.
Roman, you have a lot of experience in real estate from the investor side. When you look to invest client assets, what are the types of real estate that you're looking at?
Yeah, as we mentioned, when we look at real estate, it is an important part of the overall portfolio and allocation. I think the one thing, and Andrew will agree with this, is like anything and everything, real estate is a longer term investment. This is not just kind of a buy and flip mindset. So for us, it's getting it right and buying the right type of real estate and looking at it from a longer term standpoint. We look at the market sort of in two ways. One is we look to the public markets, things that trade on the exchanges, and we buy liquid types of real estate investments in the form of exchange traded fund or ETFs, or we look at mutual funds, right? Those are the public markets. They trade daily. There is liquidity. And then for some of the more sophisticated qualified investors, we buy into the private real estate world. A little bit of a different way of doing this. Same thing, the client's assets live with us, but instead of it being traded in the public markets, it's traded in the form of private type of an investment. The one drawback of this is that it doesn't have daily liquidity, but it affords us the opportunity to really find various types of investments, whether it's commercial, whether it's residential, farmland, industrial. We have a whole gamut of opportunity there. And of late, what's occurred is that there's been a dislocation or maybe a disconnect of the valuation behind the private and the public markets. So last year is a perfect example. The private markets were actually up, whereas the public real estate investment trusts, things of that nature, were actually down. So that dislocation is opportunistic as well. But I think one of the parts of investing in private is you have the ability to have more sophisticated types of investors where they have a longer runway knowing that it's illiquid and you don't have that type of, daily liquidity.
Andrew, what about valuations and leases? Are you seeing any price pressure here? And has that changed with the current rate environment as well?
So on the leasing front, again, going back to sort of this idea of the have buildings versus the have-nots, the the top tier of office assets, the rents have been fairly stable. Where you have seen some concession is on tenant improvement allowances, how much a tenant receives from the landlord to build out their space. That you're certainly seeing an increase there, and perhaps a slight increase in the free rent you might receive on a new lease. And I would say that's pretty consistent throughout that kind of Class A building tier. The buildings sort of below that, B buildings and below, you are seeing more downward pressure on rents as those landlords are competing to get fewer tenants, frankly. So there is some value to be had in those B and C buildings. On the investment sales side, as I mentioned, there really have been very few trades. So, it's hard to kind of gauge exactly where the market is. What the sentiment is if you can avoid selling a building now, an office building specifically, you, for the most part, are waiting, if you can, just to see where markets, where rates shake out and kind of what happens in the coming months. But buildings that have traded, you have seen, for the most part, some value there on trades, but there really has been very little of it.
Roman, I know your clients are business owners, and obviously you're a business owner. What trends do you see in real estate now?
Yeah, I mean, full disclosure, we've been renting or leasing from Andrew and his firm for the last 10 plus years. And I think it's finding the right venue and being there. So for us, just as a business owner ourselves, some of the things that we value is their ability just to come in here, literally in parachute, as they've done of late, and redo the entire building, the entire front of the building. And again, it gives us the ability to have this type A type of building, which is an important part for us and our clients feel. And the beauty of it is, look, we're 30 minutes from New York City, and also we have all the major highways here too. From our clients' lens and how they're looking at this, and some of the common themes, as Andrew sort of alluded to, is that it's a challenging environment. It really is. I deal with a lot of more residential big owners in the local community, and they're seeing some of the similar challenges as Andrew sort of alluded to. But one of the things that they're seeing is the higher increase in taxes, the higher increase of oil, and then for not getting qualified people to help them service some of these buildings. So it's become a lot more difficult. And the fact that rates have gone up significantly from doubling for whatever 2-3% to 6-7% where they currently are, that environment, to make it profitable, has become a lot more difficult to do. So it's certainly a challenging type of environment. But at the same time, like I think how Andrew looks at this, it's opportunistic as well.
Andrew, are you seeing any trends in repurposing buildings, such as from commercial to retail or residential living?
So great question. And the answer is yes. Essentially, when a lot of the commercial product was initially built in the county in the 70s and 80s, you saw a tremendous amount of commercial development and really no new residential development. And what you're seeing now, since really the early 2000s, is a lot of vacant buildings throughout the county that really were adding no value from any perspective, certainly not from a tax-based perspective. And a lot of the municipalities have really been progressive in pushing forward initiatives to convert these assets into other uses. So as you drive around the county, you'll see plenty of new ground-up residential development. You'll see Lifetime Fitness. You'll see Wegmans Supermarket. You'll see all the major hospitals out of New York City are now here. Sloan Kettering, New York Presbyterian's opening up a large site here, HSS, as well as industrial, retail uses. So that repurposing trend that really started in the early 2000s continues to this day. And we're really thrilled to see it. We need more of that in the county to continue to bring new folks into the region.
Well, we're nearing our time, the end of our time together. Do you have any closing thoughts? We'll start with you, Andrew.
No, look, the headlines on sort of the commercial market are, I would say, pretty dreary, pretty negative, and certainly for a certain sector of the market in certain pockets of the region and the country, things are bleak. But I think overall, the office is here to stay. People need a place to congregate. So long term, we feel bullish about the market. We also think a lot of the obsolete office product will be repurposed, which is good for the region. So look, we're amongst the clouds. We see the sun coming out. It may take some time, but we feel bullish long term. And that coupled with a lot of the residential development and repurposing that's going on, I think the county and the region long term is set up for success.
Roman, what about you?
Yeah, it's certainly as we look for real estate, it's a longer term type of investment. Clearly, that's the way we're looking at it. Andrew, for what you do, certainly look, we value it to what you bring to the table. As we kind of read articles and see how, particularly here in the States and things, it's 40 to 50% occupancy as far as commercial real estate. When we look abroad, it's interesting because it's a lot more people are going back to work. So I do think, to Andrew's point, that it is opportunistic. I do think that there's going to be a better sort of a buy-in area here where you're going to see a lot more people coming to work. Our office, we're probably at 90% as far as coming in. We think it's important to have that part of it. So when you look at real estate, look at it from a longer term standpoint. That's kind of how we're factoring into the portfolios. And like anything and everything, it's always trying to find those longer term opportunities. So Andrew, thanks again. We certainly appreciate you being part of this whole thing. So thank you.
Well, I want to thank you both, Andrew. Again, now, Andrew Weisz is the president of the RPW Group. Roman, whom you know, of course, managing director partner at Hightower Westchester. I want to thank you both very much for being with us. I'm Bob Marone on behalf of Hightower Westchester and Westchester Talk Radio. Have a great day, gentlemen.
HighTower Westchester is a group of investment professionals registered with HighTower Securities, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analyses, prices, or other information contained in this research is provided as a general market commentary. It does not constitute investment advice. Hightower Westchester and Hightower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This podcast was created for informational purposes only. The opinions expressed are solely those of Hightower Westchester and do not represent those of Hightower Advisors, LLC, or any of its affiliates. Hightower Advisors do not provide tax or legal advice. This material was not intended or written to be used or presented to any entity as tax advice or tax information. Tax laws vary based on the client's individual circumstances and can change at any time without notice. Clients are urged to consult their tax or legal advisor before establishing a retirement plan.